What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is January 3rd of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I not only want to spend some time to talk about the anticipated buildup towards the Bitcoin ETF and how I recommend approaching this upcoming event, but outside of that as well, I want to spend some time to talk about something that may be even more relevant here. Some of the big declines we are seeing in big tech names over the last 24 hours in stocks, especially big names like Apple and Microsoft, that could be signaling a healthy correction coming towards equity markets in the near term. We've got a lot to unpack here in today's video, so if you all happen to enjoy it, consider dropping a like. Let's go ahead and kick things off. Now, I want to go ahead, talk a little bit about Bitcoin here. As you all know, we've talked about the fact that the 21-day MA pocket is king. And this has continued to provide price support for Bitcoin, albeit we had a slight deviation below that range. But again, no serious sell side pressure there. Basically, price holding right along there and squeezing back above the 21-day, continuing the trend from 42K up to 45K. This is, at the end of the day, what you want to see if you're bullish on price. And the thing that we've talked about for a long time, really since back here in November, once we cleared through the October resistance and started to be a bit more open to the idea that Bitcoin would have a little bit more room in the near term, the big thing we're watching for is the 48-52K price range for a potential resistance range. The reason for this is twofold. We not only have the ascending line of resistance coming up into this range here, but outside of that as well, you've also got prior resistance back here in 2021, here in December 2021, and also the lower band range here, which holds some price significance as well, especially here in March of 2022. And these price bands kind of go back here as well towards some of the price levels we saw back in the earlier parts of 2021 in the prior bull market. So that's the key point here. Irrespective though, so long as that 21 days holding, Bitcoin is bullish right now. Now, I want to go ahead and talk a little bit though about what's coming up here at this ETF event here, because some people are expecting, although there's really nothing set in stone here, but the idea is that something as early as January 10th could be live when it comes to a Bitcoin ETF. And I know a lot of people are wondering, Nick, should I go long into the event? Should I short into the event? Is it going to be something where when it launches, prices are just going to go bananas and everyone's going to go crazy and it's going to go to the sky and to six figures? Or is this going to be a buy, hype, sell news event? While I lean towards the latter, because history has shown us that, it has shown us that when the CME or CBOE futures contracts for Bitcoin went live, when Coinbase had its IPO, a multi-10, if not $100 billion IPO, when you have all these big, kind of traditional financial events tied towards Bitcoin and maturing it as an asset, at the end of the day, those are usually where price declines. But I gotta tell you guys, while I do expect a lot of increased volatility during that period of time, I think what matters most here is, what's gonna really happen, like say a week or two out from, like where will Bitcoin be at that time? And I'd actually say that I think a lot of people will be surprised that Bitcoin might really kind of go sideways for a bit. It may not be a period of time where people are unloading positions. It may not be a period of time where people are absolutely FOMOing in. It just might kind of go sideways for a little bit. And the reason for that is because this is if someone sees this, for example, right? I want to take a step back here. Like if you really believe this is the start of a new bull market where we're going to six figures, whatever, and we'll have the halving event later on in the year, this is a bit of a weird timing for Bitcoin ETF, right? And if you consider the fact that the Bitcoin ETF probably isn't going to see this astronomical amount of inflows, not to mention the inflows themselves have already probably been priced in to a degree from the seeding of ETFs or people pre-purchasing Bitcoin for those ETFs, right? Plus, you also consider the fact here that, Bitcoin isn't breaking new all-time highs, or it's not having some parabolic blow up top, and we're still months away from the halving event. It may be that, price just might go sideways. We have to be open to that. So I don't want to make a big deal out of this event here beyond what it's worth. I think the ETF event, this is definitely a positive step in the right direction. I've been a big proponent over the long term about having an ETF. I'll be honest, I didn't believe we were going to get it this time around, or I thought it was less likely, considering after all that happened during the collapse of FTX and Celsius. But at the end of the day, guys, there's a high probability now in most people's eyes that it's happening. Irrespective if it does or doesn't, if it's a big deal or not, I think that it's very likely we see things go relatively neutral during this period of time. So there may not be a lot of big trading events here. And I think the bigger thing overall is that we're likely probably due for a nice cool down here. We're far and extended away, not only from some of the longer term moving averages, like the 200 week and 200 day, but even the 100 day here, right? So I think, again, more likely than not, you get a pullback over the next couple of weeks, but I don't think the ETF event is something that's just going to send prices sky high or even leave prices dumping very quick. I don't really see that playing out like a lot of people are pitching on both sides of the argument. So the one thing I wanted to say here is I do believe, as I was kind of leaning towards there, that we are getting a little bit overextended in the near term. You can see this in a kind of exacerbated way with minor stocks on equities. So for example, you've got Marathon Digital, you've got Riot Platforms, you've got a whole range of these minor stocks that, again, are well extended above the 200 week, historically speaking, outside of here in 2021 where things were just absolutely manic. The 200 week is usually kind of a resistance point here for minor stocks. So when we get above there, it's usually short term, right? It doesn't last very long. And we are still far and extended after a pretty heavy pullback here the other day, right? Pulling back here from 31.50 now to nearly 23 bucks. We are still extended away from the 21 day. I would expect a breakthrough on that, a retest down here on the 200 week as a lot of these stocks start to cool down. A lot of them are still burning through tons of money. They're not profitable. So these are purely speculative moves that people are going off of right now. Bitcoin needs to go much higher for these US minor stocks to be more profitable. It's just the fundamentals of it. But again, I'm not saying that these couldn't go up longer term, but in the near term, they look way overextended on some of these plays. We can see CleanSpark went from 3.5 all the way to 13.6. Definitely due here, has some big gaps that needs to be filled. And also we can see MicroStrategy as well. Similar price pattern here. Far extension from the 21 day after a nice rally. Looking like it's ready to come back down into some of those healthier moving averages like the 100 day, 200 day. And again, we've seen these kind of pullbacks before. MicroStrategy went from 476 down here to 310. We saw here in February, 315, down all the way to 192. It's pretty common. It moves in a little bit more of an exacerbated fashion from Bitcoin spot price. Wouldn't be too surprised to see that. Now, I want to go ahead and talk a little bit about altcoins before we go into the macro scene. I have to tell you guys again, we did a video a while back. Excuse me, as I'm coming out of another bad sickness, unfortunately. But the major thing I wanted to talk to you guys about is the capital rotation from some of the legacy plays that did well in the prior few bull markets into new plays. So one thing I'm starting to think more and more about is, again, not only our narratives here we've talked about on this channel, the ones that are going to win out, but how not only new money, there's a chance that new money could come into the space, or with an increased Bitcoin spot value, when there is an altcoin cycle, some of those values, some of that value will rotate into other altcoins. But the big thing here I want to talk about is that there's a very good chance, as we've talked about over the past 2 months now, since back in November, of a rotation, a sector rotation in altcoins from legacy plays like Ethereum and other EVM chains towards other different types of plays in the space. That could be alternative L1s, but it also is mainly going to be, I think, Bitcoin-related infrastructure. Bitcoin is the focal point here. And if you want to build a programmable layer for Bitcoin, you can do that. There are programmable layers like that. There's stacks. There's a whole range of other plays out there. A lot of new EVM-compatible L2s for the Bitcoin network that are being built right now. And I think this showcases a very big hole in Ethereum's value proposition. I don't mean to attack those of you who might own positions in Ethereum. I've been a big supporter of Ethereum since 2019. But man, does it feel like Ethereum is like a dead weight chain right now? No new exciting things that have got me really juiced up here. No new applications on Ethereum. Nothing, for example, that couldn't be deployed on a dozen other EVM chains that will easily steal that ecosystem activity because they're much more scalable, they have lower fees. And then beyond those plays as well, I think that they're just as much trouble because they suffer from almost the same position that Ethereum is in, right? They don't have any ties to Bitcoin. They're seeing practically zero single-digit growth, if anything. If anything, they're declining in their fundamental stablecoin value, the stablecoin liquidity deposited on the chain, or any other kind of metrics that we'd utilize, developer commits, etc. And you don't need me to tell you this, right? You can disagree with me all you may want. You could agree with me 110%. Look at the chart, guys. Look at the monthly. We've been saying this since 2022. Ethereum is losing out against Bitcoin. It might be going up in dollar terms, but the name of the game here in crypto is you either buy Bitcoin or you buy into plays that are consistently helping you to outperform Bitcoin as an asset. If you're not, why not just buy the king? Why not just buy the largest position in the market, the safest bet? Because Ethereum right now, for 4 months, has been below the 200 week. This is not a good sign to see. Very different from the response we had in June of 2020 at the 200 week, where we didn't wait for this huge gap to go down here towards the simple moving average, but the EMA was support. And then afterwards, we had a 34% move month over month against Bitcoin for Ethereum's price. Now we're struggling at practically every single moving average. We're not even coming up to test the 200 day, the 100 day, 200 week, or consistent resistance, and the 21 day is trending lower. Why would you want to touch it? I know a lot of people like it, and I see it as well. I see it in the comments, and I see it when people react when I talk about it. There'll be a day where it moves up 3%. They're like, "Oh, see, Nick, you're bearish right when the markets are moving up." It's like, yeah, 3%. Like, whoop-de-doo. Like, it's down for the year 30+% against Bitcoin. I'm only saying this here not to attack anyone's positions. I'm here to be your friend, guys, and let you know, hey, the trend doesn't look very good. Until that starts to change, right? This is just a fundamental reality here, guys, with markets. You need to wait for the trend to showcase itself. And this is not just me attacking Ethereum. You see it in Matic. You see it in a lot of these L2s that just really don't offer much new to the table, right? Matic here struggling to hold at prior support in the past against Bitcoin. It's 200 week, serving as consistent resistance for the last, guys, almost coming up on 6-7 months here. Not a good look. It's not a good look. Now, that being said, right, we've also got BNB, another EVM compatible network, or Binance Smart Chain more particularly, which makes up a lot of the value of BNB beyond its utility function on the Binance exchange, right? Even with the recent rebound, we got about a 22% move here, well below that 200 week. It's working from a 74% pullback here. So it's got a long way to go. Now, for some of those plays that have been stealing the thunder, I have to tell you all that even though we're going to see that capital rotation, I think it's going to be going a lot more towards Bitcoin infrastructure. Plays like Solana look overextended at this point, right? You're seeing that here in the continued fade down over the last few days, right? It's at a minimum looking like we're coming out here to the 21 day, which is a pretty steady pullback here in its BTC terms. And if that can't hold, you're likely coming down here towards the 100-day EMA. Big pullback here on names like Solana. And again, USD terms, right? Seeing a big fade yesterday after there was a continued move upwards. Again, not only looking like the 21-day is destined at this point, but very much like there might be a day with destiny here down here on the 100-day EMA as well. So keep an eye on that as we go throughout the next few weeks. Meme coins like Bonk as well. Another prime example here that the Solana ecosystem, Avalanche, the Alt L1 play, I think that narrative is a little bit drier right now. It needs to cool back, come back down to reality. There's not much fundamental things to be excited about when it comes to these L1s, let alone meme coins right now, with the focus being on the Bitcoin ETF and a lot of these plays making some sizable returns. We need these to cool down much more towards some of these moving averages. So the big thing, again, I want to emphasize when it comes towards where we're putting our focus here for altcoins right now, it's in Bitcoin infrastructure. Bitcoin infrastructure is going to be the play here for the next couple of weeks and months with the Bitcoin ETF. And I think that there are a lot of different plays out there, many of which we've talked about here on this channel. You guys know, again, we've talked about stacks, we've talked about the ordinals in this case, or ordi. There's a lot of different plays where you can at least get attached to that narrative of being associated with Bitcoin, irrespective of whether or not you like it from a fundamental basis. Now, I want to go ahead and talk about something that I think is equally as important here, which is what's going on in equity markets. Essentially speaking, the big thing I want to talk about in equities is that yesterday we had what I think is actually a very significant price move in Apple. And we're looking at the weekly chart here. This was a gap down here of around 3.58% to start off the week. on Apple's stock price. It's been one of the biggest gaps we've seen in Apple's price in some time. Even if we take it down here to the daily, this was the biggest price gap we saw since back here in August of 2023, or back here in September of 2023 as well, depending on how you look at it. But the major thing here that I want to echo is not only why this might have happened, but outside of that, what this could signal for the broader equity markets. Because when Apple makes a gap down of 3%, when Microsoft, when these big technology plays gap down, 1.5, 2 percentage points immediately at the open, right? And if they continue for another day or two, this is a really clear, concise sign that markets are probably well due for a correction. And I'll talk about that, right? Not only did this recent drop get blamed on by the downgrade from Barclays, one of the largest financial institutions in the world, coming out and making a statement that iPhone 15 sales, and especially in key demographic markets like China, were underwhelming. Beyond the fundamentals here, and obviously recessionary concerns that I think any sound investor should have on Apple, we need to understand the fundamental point here that Barclays is pointing out. The continued period of weak results, so weak financials, that's one part of it. But the other one, the multiple expansion, right? The PE multiples, the price to earnings multiple people are paying for these stocks right now, as they state here, is not sustainable. The music, I think, on many of these names is about to stop, guys. And look, it's been fun. Apple has the biggest stock buyback program, pays a little dividend. Apple, has just been an absolute titan over the last decade. Going from, after having many reverse stock splits, or actually, no, sorry. I think they had to do many stock splits and stuff. But essentially, going back from 2009, right, $4 a share, Apple was already still a pretty established company at the time. The iPhone was out then, right? And since then, Tim Cook, the team, have been able to carry forward this company to becoming a $3 trillion entity. I have no hard-felt feelings towards Apple. All I'm saying here is that it's difficult to double when your market cap is already $3 trillion. It's difficult to not only double your financial revenue and income to justify trading at the same PE multiple at a $6 trillion valuation. But on top of that, even if Apple just keeps its financials where it is at the moment, a 31.4 PE multiple is not sustainable for a company like Apple that has not seen its income grow over the last few years. Apple's no longer the growth name it used to be. And because of that, the market will eventually stop repricing. They'll start to reprice the company in a way that it is not essentially a growth stock, right? They'll start to price it more as a more predictable 10, 15, 20 PE multiple company rather than a 30, right? This is a big point here to keep in mind, guys. And it means that even if Apple doesn't get hit by a recession, from this point onward, if it pulls back, say, from a a 30 PE multiple down to, say, a 20, you can easily see Apple come back down here towards its prior lows here in January 2023. That's what basically happened during that period of time. And if there are some out there who believe that not only can happen again, like it did back in 2022, but along with that, it could be even worse considering that the real recession might be coming, I would say to heed caution to those individuals and to understand the ramifications of what for example, 33% or even 40 to 50% correction would mean for the broader asset markets. The amount of market capitalization and value that will be given up during that period of time. The tens of trillions of dollars of wealth that will be evaporated if that event happens. And all it really needs, you don't need something in the financial system to break. You don't need some big one-off event. Sure, there'll be some catalysts or maybe some visual signs of this, but you could just have an earnings recession. It happens. And you have a major PE multiple contraction on these stocks, very similar to what Barclays is talking about here. And if you look at insider trading, all you've got over the last, over the last entire year It's just insider sales, tens of millions of shares, right, being sold here throughout a lot of participants within the company. You can also see here as well, Microsoft on the weekly time frame, right? Again, same exact trend here. A lot of these plays here, whether it, for example, be Nvidia, Apple, or Microsoft, all not only have had great run-ups in 2023, but they are still far and extended away from that Lux Algo support band. This would be a range where if you wanted to buy these stocks, you buy them on a discount, right? You buy them when they're showcasing nice ranges for solid entries that give you good risk reward setups. And again, if we come down here into this green band and we don't hold and we break lower, that can be a sign of a further long-term downtrend, which will then flip into a resistance band for its price. We can see this as well on Microsoft, far away extended here right now at $370 a share. Support band is down here around 315, 330, and Nvidia here as well. Around 391, 415 for the support band. We're currently at 481 with no serious trend acceleration. Looks really overbought to me personally, guys, irrespective of whether or not you like the AI trend or not. Just from a chart perspective, it doesn't look like it's something that I'd want to go long right now. And again, Nvidia is a $1.2 trillion company. Microsoft's a near $3 trillion company. Apple's a $3 trillion company. These three companies are behemoths, and they're looking like they're ready to start knocking down dominoes across the board in equity markets for what is very likely going to be a simple, healthy correction to start, which could expand out into a recessionary bear market when that recession comes. If the soft landing doesn't play out as many people are calling for, and I have to tell you guys, I'm not a believer in the soft landing. It's the same exact terminology and narrative that was shared in 2006 and 2007. And sure, we don't maybe have a housing crash the likes of 2006 coming into play, but we've got a lot of issues across the board in commercial real estate. You've got a lot of issues in local, small, and regional banks. You've got a whole range of smaller issues that could still have a major impact and cause what we're calling for here, which is a simple earnings recession. Now, if you guys want to utilize tools like we just talked about here, the green support band, I recommend using the Lux Algo indicator on a weekly or monthly time frame when it comes to equities, on a daily, weekly time frame when it comes to cryptos. But if you guys want to get access to this, you guys can definitely sign up at using the link down below in the description. Once you subscribe to Lux Algo, you get access towards a whole range of indicators within the Lux Algo suite. And if you want to utilize it like I do, well, I do like to tap into a lot of the indicators. For me, I personally like the Lux Algo signals and overlay indicator. This is the one you guys probably see me cover in my videos, as I did today. And I like utilizing the trailing band for both support and resistance, but also for potential trend reversal spots on the longer-term time frames. So I think it can be a really powerful addition to your trading arsenal. If you guys are interested, again, you can check out the link down below in the description and get 35% off on the monthly, quarterly, or annual plan. Now, I want to go ahead, talk a little bit here about what's going on in equity markets, and I want to reiterate here, and I want to close off on why I think it's equally important for you guys to be watching these tech stocks right now than it is just watching crypto markets. Because I know many of you out there are saying, Nick, all right, look, I've been patient, I've waited this long. I'm just curious to ask why I need to be watching Apple, Microsoft, and Nvidia, all these plays, when I'm mainly trading altcoins and Bitcoin. The reason why is because while we may like to think that it is entirely separate, and yes, crypto generally outperforms equities, no doubt about that. It's a much smaller market, it has more markets of scale. At the end of the day, Bitcoin is now an $850 billion asset. Crypto as a whole is a trillion, I think $1.5 trillion market, $1.5 trillion in market cap. It is no longer a pet project. It is no longer some fling that is supported by libertarians and anarcho-capitalists and people who were seen as the fringe back a couple years ago, who are now at the helm of creating what may be the next digital gold or next big asset, right? Irrespective of where you stand about where Bitcoin's going with its price action, with the ETF, it's a major market. And you don't need to be a genius to simply just bring up Bitcoin's price alongside the NASDAQ and see that there is a clear correlation. When Bitcoin is declining, equities tend to decline. And when Bitcoin tends to rise, it's during a period of time where equities are usually expanding. And As we zoom out, we can see this trend clear day by day here. There is a stark correlation with the performance of broader assets and the performance of Bitcoin. Bitcoin trails along with a lot of these assets, and while it may have more exacerbated moves to the upside or downside, it's generally following in the same direction on a monthly basis. So keep that in mind here. If we see a massive pullback in Apple, in Microsoft, in Nvidia, into cash, a big PE multiple contraction, that could very well hit Bitcoin, even though Bitcoin's not a company, even though Bitcoin is not a $3 trillion tech giant. It's an important thing to keep in mind though. So anyways, I rambled on a good amount here, guys. I hope you all enjoyed this video. If you did, consider dropping a like. I hope it provided some food for thought. But I will see you guys on the next video. Again, if you enjoyed it, drop a like. But until then, I'll see you guys at 6 a.m. Eastern Standard Time on Friday. Stay safe, trade smart, and I'll see you guys in the next video. Take care, everyone.